Hello and welcome to Livewire's Buy, Hold, Sell. I'm Tom Stelzer. It's the NRL Grand Final this week, and so we're taking a look at the playmaker stocks that are bringing the innovation. These are the Nathan Clearys and Nico Hines of the ASX, the companies with the magic touch and strong game management. But to separate the MVPs from the pretenders, I'm joined by Tim Riordan from Blackwattle and Brenton Saunders from Pendal. Thanks for joining us, guys.
Thanks, Tom.
Cheers, Tom.
We're going to start off with data center operator NEXTDC. Tim, I'll come to you. Is that a buy, hold, or sell?
Look, we're a sell on NXT. I guess the thing the key challenge for us is, I suppose, an outworking of the business model. We just don't get the returns. We get the attractiveness of the space. The market there is absolutely firing in terms of demand for data centers, particularly driven this latest sort of layer is AI driven. So that thematic runs wild. So you can understand the appetite. But when we work through it from a quality perspective, we struggle insofar as you can see EBITDA growth, yet assets grow even faster, led by capital raises. And so underlying, we sort of struggle with the idea that we're really being compensated for deploying that capital. As the business is trying to grow so quickly, they're deploying capital ahead of the returns. But if we look at the older cohort of the data centers, again, we're seeing really, really modest returns there. And so then we think about, okay, who's the customer? We're talking about some of the biggest hyperscalers globally, the likes of Amazon and Microsoft. Those guys don't pay a lot if they don't have to. And so that's our sort of thinking, is that there's just some risk there that those returns that investors are playing for don't eventually come through. And so for playmaker type stocks, we think there's alternatives out there, and so that's what keeps us sell.
Tim touched on it there. It's one of the big narratives at the moment. But Brenton, are you a buy, hold, sell?
I'm a hold on this one. Very divisive stock. The CEO considers himself the playmaker. Sadly, he's not in the Paddy Dangerfield kind of genre. I guess the reasons to own the stock is like Tim said, the narrative behind demand for their product is just next level and accelerating. So that it's quite hard not to be seduced by that, and also the realization that most of their product that they're selling are such core and almost binary risks for their customers that they really can't afford not to have it. But monetizing that is the real challenge, because it's an incredibly capital intensive business. But I'd have to say the primary risk for not owning this stock, and that's why we do own some, is strategically, both regionally and globally. It's not one of the biggest players, but it's probably one of the highest quality and has the best land bank of all the developing players. So the potential for it to get acquired is reasonably high, elevated, I would say. And in the mid-cap space, that's one of the main characteristics of it. I'm always dealing with 3 or 4 takeover situations of stocks in that space. And this one is, for me, despite my reservations around the capital intensity of the business, is definitely in that category. And the things that count against it are pretty much what Tim said: lack of pricing power, you're up against the biggest players in the business, incredibly long dated returns, and very incredibly capital intensive. It's tapped the market 3 or 4 times in the last couple of years, which has been very frustrating for the market and just keeps smacking the share price on its head. It's pretty divisive, and those are the 2 considerations. You've got this outsized demand for very high quality product, weighed against the capital intensity and long dated nature of the returns.
Next stock is testing service provider ALS. Brenton, I'll stay with you. Is that a buy, hold, or sell?
That's definitely a buy for us at the moment. As playmakers go, I wouldn't put these guys as captain of the grand final team, but I would definitely say the acquisitions and changes they've made to the existing businesses, particularly the mineral services business in the last 3 or 4 years under new management, have been very positive. So from that perspective, we're very strongly predisposed to the existing management team. We think they have good experience. We think they have got good continuity, and we think they have a good business that they're running. Probably the biggest attraction is a cyclical one. Anybody who's looked at the gold price recently will realize it's very high. I've got gold companies pouring through our offices that are walking about 12 foot tall. deploying a lot of capital in both exploration and building new mines, and that's absolutely core business for ALS Minerals division, which is still its biggest and its most levered division in that business. So even though by historic standards its rating or its multiple is relatively extended, it's very hard to bet against a business like this when it's got such a big cyclical tailwind in prospect. So we're definitely a buy.
Tim, what about you? Buy, hold, or sell?
Yeah, echo Brenton's stance there. We're a buy as well. So I think some of the things that really stand out for us in terms of looking at high quality businesses and considering relatively cyclical ones like ALS is that the diversification of the business and the way that the management teams over the last 10 and 15 years have deployed capital has really improved that sort of cyclical nature of the underlying businesses and segments that it operates in. It's been trying to grow in life sciences, environmental testing, pharma testing and the like, to shift away from the metallurgical testing at its sort of roots. Having said that, the consistency of the returns are really what stands out to us in terms of driving this one to be a real kind of in that echelon as a global compounder. You know, revenues can grow sort of mid to high single digits. It's not knocking it out of the park, but they can layer on top of that with capital returns into M&A, which they've done successfully and consistently. The benefit therefore of the consistency, which is one of the hallmarks that we seek in terms of looking for quality businesses, is really around the compounding in terms of returns for shareholders. And so we spoke about some other cyclical industrials in other episodes. And so to compare with this one, if you look at the post-COVID period, the consistency of the returns, and I'll give Brenton a point for the point on gold because it has been a tailwind, but the consistency has meant that the compounding benefit has been enormous for shareholders. And so it's outperformed by over 50% versus mid-cap indices just since COVID. That's a continuation of a longer-term trend. So yeah, hard to bet against this one as well. It's a buy for us.
You both touched on it there, but another big trend at the moment, obviously gold, and that gets us to our third name, Capricorn Metals. Tim, I'll stay with you. Buy, hold, or sell?
Capricorn's a buy. We really like what the team at Capricorn have done. One of the key points of attraction is actually the team. So there's two big things we look for when we're looking at quality through the quality lens at mining businesses. One is the team and two is the asset. The team in this case we think would challenge any other in terms of the things that we're looking for is consistency and conservatism. So consistency, some of the core team here have been working together through 3 corporates now over 20 years. They've approached every mine that they've built and operated with consistency, looking for a similar type of mine to plan and develop for that mine, to produce consistent output quarter on quarter with a focus on delivering really strong cash output. Looking at the assets that they choose, Capricorn operates one mine, and one of the key points of attractiveness here is that they're in the process of developing a second mine, waiting on some approvals. Roll forward 2 years, we should see a sort of a near tripling of production. And so it's the expandable nature of these assets that we find super attractive. The point on cash, the way the team runs this business is really to focus on consistency, delivering really strong returns. They've got a wonderful track record of deploying very modest levels of capital. For example, the development asset Mount Gibson was bought back in 21 for sort of $40 million. We can see a valuation approaching $2 billion for that asset. So it gives you a sense, obviously there's been a huge gold tailwind. I'll let the audience make up their mind of where gold's going, but put them in the right place at the right time. But the way they run the asset is very conservative and it's highly consistent, and that's why it's a buy for us.
Brenton, what about you? Buy, hold, or sell?
Yeah, we're definitely a buy on this one as well. I'd have to echo a lot of what Tim said. I guess the 3 things for us on this one are simplicity of the business model. These people know exactly what they're good at and what they do well. Although they have done something outside of WA before and successfully, They much prefer to do something inside a WA where they understand the environment, they understand the regulatory regime, and they understand all the procurement and service providers for the industry. I'd also echo very conservative in terms of their approach. They also happen to be one of, if not the lowest cost producer in Australia. So that's the one side of it. I mean, this is a very, very good management team that executes well. The other part is the growth. So this is, for us, a mid-cap company must have either a very big addressable market or inherent organic growth in it. And this one has that through, as Tim said, the Magnet acquisition, and it's absolutely organically funded. So we're not worried about them coming to the market to raise money to build one of two of their assets. They're incredibly cash generative. They can easily fund effectively a doubling in the size of the business. And then, the tailwind of a very high Australian dollar gold prices is a big, big plus. The other one that I didn't mention is alignment. So this company is 100% aligned with shareholders. All of their employees and certainly their exco are heavily incentivized through stock in the company with strongly sort of benchmarked or gated sort of hurdles to get access to their incentive structures. There are very few companies that I've come across in that space that are as aligned with shareholders. I'm never questioning, what it's about for them. For them, it's about exactly what you want.
We've also asked our guests to bring a stock they think's got a winning strategy right now. Brenton, I might come back to you. What have you got?
So I've got the other captain in the gold space, and that's Raleigh Finlayson in GMD. Not that dissimilar to Capricorn in some respects. Here you have a proven management team that have done it before at Saracen and Northern Star, and now are just doing it again. Their competitive advantages, I think half of them went to the Kalgoorlie School of Mines, so they know that place like the back of their hands. They know which ore bodies they covet. They know the synergies between assets and how to put them together. So that's the one bit. They really have strong local knowledge and a competitive advantage in that. They also have very strong organically, internally funded growth, which is another hallmark of these companies that we covered. Because it has relatively a low cost of equity or high multiple, it just puts it at the forefront of being able to consolidate a lot of companies around it. That makes sense to be able to do that over a period of time. And this management team proved itself at Saracen of being incredibly capable, considered in everything it's ever done. It's always sort of reinvested in the business. It hasn't relied heavily on the market for capital and added value through that. Also, the final thing I'd say is conservatism. If they say they're going to do 10 ounces a month, they're going to probably do 11. And as a shareholder, you never really are concerned about a big negative surprise in prospect in the operations.
Tim, what about you? What name do you have for us?
We've got WiseTech today. So we think WiseTech's interesting playmaker stock from the perspective that the starting point, obviously having come through a really tumultuous period, puts it in a super interesting situation. At the outset, this is a super high quality company. The financial metrics support that and have done for many years. I think that the global nature of the product set and the huge opportunity to continue to grow is really attractive. The absence of competitors of any scale has been super supportive for the development of this business over time. We don't see that changing immediately. There's a couple of things which stand out as attractive as we think about this one now, which sort of set it apart from its history. And that's that it feels like there's an extra couple of layers of flexibility or levers at its disposal, primarily around the development of AI tools. And on top of that, the recent acquisition of E2Open. And so what we sort of think about there as we look out over the next couple of years for the business, the way that it's traded puts it in this interesting juncture that layering E2 Open into the business together with some synergies that they should extract over the next sort of 18 months sees it trading on almost half the multiple that it's tended to trade on. It's sort of tended to sit in that 45 times EBITDA range. 27 would put it on 25 times. So whilst the management team have gone through some turnover and some change, there's definitely some proving out to do. If they can execute well, new products I mentioned, a slightly different business model coming through to support those new products, and then layering on E2 Open, you're basically putting the stock in a situation where it'll be trading on half the multiple that it's used to. In our experience, that tends not to be what happens for a really high quality company. So look, proof will be in the pudding, but we think that's a really attractive one at the moment.
That's all for this episode. Thanks to Tim and Brenton. If you want more buy, hold, sell, make sure to check out Livewire's YouTube channel.